Hello, everyone. Thanks for joining and welcome back to Wall Street Bullion. Our guest today is my good friend Peter Boockvar. Peter is the Chief Investment Officer with One Point BFG Wealth Partners. Welcome back, Peter.
Thanks for having me again, Ivan.
Yeah, thank you so much for coming down. There's been a lot of talk recently about, market bubbles, AI bubbles, where, even in the precious metals market, they're talking about, are we in a healthy correction? My first, question for you, Peter, is, how should investors interpret where we are right now, especially with everyone talking about the AI bubbles?
Well, I think it's important to differentiate when people say AI bubble. I think the bubble discussion and debate should really be taking place on the physical data center infrastructure build out in terms of are we building too much space for what will eventually be needed? There's no debate, I don't think, on the need for all this computing power. But the history of technology is hardware gets smaller as the software gets more powerful.
Hmm.
So the use of AI, well, society's been using forms of AI for generations. So that is just software that continues to evolve. So I
Right.
think it's important for people to distinguish when I hear is AI a bubble? It's the data center build out, which is really the debate of whether are we building one too many data centers. I'm not smart enough to know, but I do think that there are legitimate questions. And like I said earlier, uh, you know, the hardware always gets smaller but more powerful. So who's to say a facility that is being spec'd at 4 million square feet that maybe the operator will only need two
Right.
uh, in 3 years because of the obsolescence of the equipment, but also getting smaller and more powerful at the same time.
Absolutely. And looking at an investment portfolio, are you guys, cutting back on your long-term positions? Are you guys looking at, getting into short-term bonds, like to cover yourselves, or like where are you guys putting your money right now?
Well, this year, you look at the Mag 7, it's been a very splintered up group. Prior to this year, all those stocks rallied together and obviously dominated the market to an extreme extent. This year, it's become much more bifurcated. So we've tried to be more balanced with other things, like metals, like international stocks, like other value names within the S&P and not just be too allocated to those big names. So while as a firm we're still long them, it's much more diversified. For the portfolios that I manage, I don't own any of them, and I think over the next couple of years, in terms of seeking out returns, you're not going to get it from those stocks, and that the beneficiaries of this AI spend will not be the builders of it; it'll be the users of it.
Hello, my silver and gold bugs. I just wanted to say thank you so much for watching the video. Hit the subscribe button, hit the like button, and also hit the notification bell so you don't miss any future uploads. Back to the
Of
video.
it.
No, that's perfectly said. What are your thoughts right now, Peter, on the precious metal space, silver and gold? A lot of people are talking about how we had this, this little bit of a correction after that big run up in the past month or so. But it was needed because it can't go vertical forever. What are your thoughts right now on the silver and gold market?
No, that's the exact right word because it did go vertical. And no matter how bullish one is, that's usually the tail end of a move. Not the move, not calling a top here, but a temporary move. Just as a sprinter that runs too fast, they still may get to their destination, but they still need to take a breather. They still need to take a rest. And I think that that's what's going on with gold and silver. We're still long, we're still bullish. Full disclosure, we did trim a little bit of gold when it did go vertical, 42, 4,300. Didn't touch silver because I still think there's a lot more upside, but still have a good, healthy position. But acknowledging again that it's in a consolidation digestion phase. I have no idea how long that lasts. I still believe that the fundamental underpinnings are still pretty positive, but again, something that goes vertical is due for a rest.
Absolutely. What's concerning you right now, or just what do you have your eye on, that concerns you? Like, could it be the Fed? Could it be, them cutting liquidity? What are your thoughts?
No, I think the Fed is becoming much less relevant. in the sense that, yes, they may cut in December, and the New York Fed President John Williams basically told us that's what they're doing because the New York Fed is a voice of authority when they
Hmm.
speak. Because I have to believe that Jay Powell knew what John Williams was going to say before he said it. But long end interest rates are not falling. And that sort of neuters what the Fed's trying to do. So if you're looking to buy a house and thinking the Fed is going to lower your mortgage rate, well, obviously in the US, because we have those 30-year mortgages, long rates have not fallen while the Fed has cut 150 basis points. The other things that worry me are the sustainability of this AI trade, not just from a stock market perspective, but from a infrastructure build out perspective, because the US economy has been tremendously lifted by that physical infrastructure spend. And the other thing that worries me is the lending space, particularly private credit and private equity, and the sizes at which these asset classes have gotten. And when there's too much money, I can guarantee you there's not enough good deals and good loans that they're chasing.
Hmm. What would be your advice to someone trying to navigate this market right now?
Well, in terms of, so the way I try to look at it is, everyone should have a dashboard up and they should have different things on that dashboard and look to see when they're flashing yellow or flashing red.
Hmm.
You look at AI, what has flashed yellow for me is the stock reaction to Oracle after that spike, after they reported earnings and their agreements with OpenAI, among others. Uh, the stock reaction to Meta, they reported a phenomenal quarter, and it's amazing to see a company with that revenue base still produce 20% plus revenue growth. But people gave them a big thumbs down on all the CapEx spend, CoreWeave, and of course, NVIDIA. I mean, Nvidia was your classic sell in the news. Not that Nvidia's quarter was strong. Their guidance was fine, but what we saw was an epic example of a stock that has told the world, yeah, great news, business is fine, but we've already priced it in at a $4.5 trillion market cap. So
Hmm.
that should be on people's radar. And on the private credit side, I encourage people to watch the ETF BIZD, which is the BDC ETF. And there's an LSTA leverage loan index. If you can get that on your terminal, I would watch that too because it's a price proxy for leveraged loans.
Absolutely.
Hi, I'm Michael Piccioni, founder and president of Can-Am Bullion. At Can-Am Bullion, we are more than just a precious metals dealer. We are your trusted partner in securing your financial future. As an authorized dealer of the Royal Canadian Mint, we take pride in offering only the highest quality gold and silver products. And with our best price guarantee, you can trust that you're getting the most value for your investment. We offer free, no obligation consultations with one of our precious metals experts. Our commitment to excellence has earned us a 5-star Google rating, a shopper-approved seal of approval, and an A+ rating from the Better Business Bureau. These accolades reflect our dedication to transparency, integrity, and exceptional customer service. Are you ready to take the first step towards financial security? Contact Can-Am Bullion today for your free consultation. Let us help you build a brighter future with the power of precious metals.
Absolutely. And one question before you go, Peter, I want to ask you, like, how does the ongoing, de-dollarization globally, you're looking at, a lot of countries like China, Russia, moving away from the U.S. financial system. So, how does the ongoing de-dollarization movement globally impact the U.S. financial system?
Well, I think that's something that takes place over time. One of the interesting things that I've seen this year is foreign investors are still interested in owning US assets. Less
Hmm.
so on treasuries, but still with stocks. But they're hedging more of their dollar exposure. And also because that dollar hedging is getting more expensive, they're finding other places to put their money. And we've seen tremendous outperformance in international stock markets this year relative to the US. Also, of course, the trade war that the US started with the rest of the world also encourages other countries and other regions to sort of rely less on the US, both from a trade perspective and a currency perspective. So this is an ongoing trend that will only continue.
Absolutely. Well, Peter, I want to thank you so much for coming down and speaking to the precious metals community. Before you go, though, where can people connect with you?
So on the wealth management side, people can check out our new website, onepointbfg.com, and learn more about our services. And from my daily thoughts that I pen every day, macro and markets, they can go to Substack, type in my name, and it's titled The Book Report.
Oh, no, thank you so much, Peter, for coming down. Huge pleasure. The conversation we had today will help a lot of people, especially a lot of people were messaging me and just you could see the chatter online about the worries in the AI market and the stock market. But it's nice that you broke down what the AI market is, like in the physical landscape. So thank you so much. And as the market develops, love to have you back on soon.
Sounds good. Thanks for having me, Ivan.
Talk to you soon.